Hello everyone, welcome to a new video. It's been quite a long time since I've recorded a video, and this morning I found a little bit of inspiration and decided to talk about how to size your trading positions. Now, this is a really common question, and it's understandable. People want to have a mechanical system that tells them, you know, do I decide to go on a full position, quarter size position, or something like that? And the answer to how do I size my positions is kind of general and vague. And there's a good reason for that. And the answer is it depends on your confidence and your analysis of both the market and stock on a longer term, medium term, and shorter term time frame. So let's try to break that down a bit and show how I walk through that process. And I try to simplify it as much as I can, um, while of course taking in things that matter, right? Context across multiple time frames and so forth. But let me just say right away that if you are a newer trader and you are trading paper account, one share, or just a small sized account, you really shouldn't be worrying about position sizing too much. You should be more focused on getting your win rate up, your confidence in your ability to execute trades with consistency, adhering to your technical thesis, your stops, and so forth, because that's going to matter a lot more than determining how you size your trades, because you need consistency and how you execute every day and what you can expect, statistically speaking, from the trades you have made in the past to what your win rate might look like. How do you trade in a choppy intraday market that's waiting for news? All that kind of stuff. But let's just say either you don't care about that process of going through and trying to figure out how to trade, or let's just not be cynical or assume that you are just trying to jump the gun here. And let's say you're just genuinely trying to figure out how the hell to size your trades. Okay, let's actually walk through that process. So first of all, market first. We always start with the market because our edge is to trade stocks that have institutional involvement, and we can identify that by looking at stocks that have relative strength and relative weakness to SPY or SPY or the market. And because we need the market to give us our general forecast on are we bullish, are we neutral, bearish, and so forth, we always start looking at a longer term time frame of SPY. So here's a day one chart or a daily chart of SPY. And since June or so, or I should say July, the market's been pretty volatile. You can see a large move down, a big bounce up. We had a compression below the all-time high, and then SPY made a lower high double top, and it tried the downside. And it found support at the SMA 100 just above it. And sorry, I don't have those SMAs up right now. But the SMA 100 is just underneath the lows of these two candles. And just like when it seemed the market was finally going to get sustained movement to the downside, it bounced right back up to just below the all-time high. And we're back in this little compression zone here while the market waits for important news on Wednesday. And that important news on Wednesday is the FOMC. Now, the Fed is cutting rates this week. Finally, after a long time of an aggressive rate hike cycle and a relatively long pause of high rates, they're finally going to start lowering rates a bit. Now, don't expect 0% interest rates in just a matter of a day or something like that. It's probably going to be a pretty gradual process. But nonetheless, the market's waiting. And one big question, or two big questions, are how big is the rate cut going to be? Are we going to get a 25 basis point cut? Are we going to get a 50 basis point cut? Right now, the market is almost split on a near 50-50 bet of is it going to be 25 or 50 point cut? So that's kind of a big question. And then the other question is how many more cuts can we expect to see this year and going forward in the future? What does the timeline look like for how aggressive we can see cuts? Are there signs of anything that concerns you about potential economic weakness, or do you feel confident that the economy is strong and we can lower rates at a moderate to more mild, slower pace, right? All these things. So then when you combine that with the technical picture of we are right below the all-time high and we could break out, we could sit and do nothing, or we could break down, and this volatility, this tells me on a longer term basis that, well, I'm relatively neutral. I'm not overly bullish and I'm not overly bearish. I'm not really slightly even either of those either. I'm kind of just seeing this volatility and the pending news and the possibility of a breakout or a breakdown or sit in a compression and do nothing. And it tells me that I need to chill out on swing trades. And that, of course, is important on a longer term basis because when you're swing trading, you're holding positions for overnight, a couple nights, a week, whatever. So TLDR in the longer term time frame, I am not swing trading. I am only focused on day trading. So I will pause right there and just say my evaluation of how I size positions starts with the longer term time frame on the market, and I work my way down to an intraday basis. And then I basically do the same for the stock, longer term to shorter term. And I basically have more or less 3 position sizes. And those position sizes, more or less, are, we can call it a rating from -3 to 3, where -3 means I'm very, very bearish. A 3 means I'm very, very bullish. 0 means I'm neutral, in which I just won't take a position. And, 1, -1, I'm mildly bullish, mildly bearish, so forth. So on a D1 basis, I'm pretty neutral. I am in wait and see mode with the market, so I'm not swing trading. Now, if I work my way down towards an hourly chart, I get a little bit more of a direct picture over the last month. Here was that compression back from late August, where the market was wiggling and jiggling around in this tight range below the all-time high, in which we saw a breakdown. And this was nice on the breakdown because we had some solid movement, and we were waiting for that because the market was doing a whole lot of nothing for a while. And as we saw on the daily chart, we had a pretty aggressive bounce off of the 100 SMA. You can see we've got a little higher low here. Buyers came in aggressively on heavy volume and ran the market right back up just below the all-time high into this compression from hell. So hourly basis, I'm also relatively neutral. Now I dig a little bit more into a shorter term time frame or a medium term time frame, like a 15-minute time frame, 30-minute time frame. So what do I see on a 15-minute time frame? Well, the 15-minute chart shows me the last several trading sessions of SPY over the last week or so. And what do I see here? Well, I see we had, if I scroll back a little bit, we had a bearish decline. The market was forming some higher lows. We were seeing some two-sided movement. Market tried the downside once more, and then we saw that aggressive run-up. So this is a really strong move. And although the market is starting to kind of dwindle out a bit while it waits for news, this is undeniable strength. And that tells me that buyers were interested over the last several trading sessions. So on a shorter medium-term time frame, I'm pretty bullish. Now, when I go down finally to an intraday time frame, what do I see? Well, when I look at the intraday chart, I like to look at both, obviously, today's price action, and I also like to look at the prior day's price action. And we can see how the market kind of went from that really strong move like we saw on the 15-minute chart to now it's kind of moved into more of a horizontal trading range. And today I can see that SPY is more or less stuck right where it was from the open. And when I look at the intraday time frame, I can see a lot of wiggling and jiggling around on light volume with mixed overlapping choppy candles. We can see now after this little bid check this morning, we formed some higher lows, and SPY after trying and trying and trying and trying to get above VWAP, it's now seeing a little bit of progress, but I'm not looking at this like it's time to load up and go all in because, well, the overall picture over the prior trading session and today tells me that I shouldn't expect anything too crazy. So my overall conviction on an intraday basis is neutral to very, very slightly bullish because I feel confident that we do have a little bit of a bid here. Okay. And I do think that buyers will try to push the market back up a little bit. But based on my analysis on the longer term time frames, like the 15-minute chart, the hourly chart, the D1 chart, and knowing that we have big pending news in a couple of days, I'm not expecting to see a whole lot of big movement. And so all of that combined, knowing I'm not swing trading, I'm only looking to day trade, and knowing my bias on a very short-term time frame is neutral to at best slightly bullish, that basically tells me I am not going to be trading anything more than a slightly bullish position size. Now, what does that mean? Well, on my scale of -3 to 3, that means I am a 1 out of 3. So a slightly bullish position. And that's generally my starting size position. And that's without even looking at the stock. Just the market alone right now tells me I probably should not be going above that starter size position. So that was the market. Now we go to the stock. Market first, stock second. And again, I have not even looked at a stock. And I already know that I should not be going more than a slightly bullish starter position size. And I can gather all of that from just looking across 4 or so time frames, from a D1 basis to hourly or 30-minute chart to a 15-minute chart to a 5-minute or intraday chart. But now I can go to the stock. And what is it that I'm looking for in the stock? Well, I want to see how the stock has been, or how the stock moves relative to the market. And when I'm trading a stock, I basically want to see my stocks line up across multiple time frames. And what does that mean? It basically means I want to see a stock that is at least bullish, meaning like a 2 out of 3 across, longer term D1 basis, H1 basis, medium term, and then an M15 and M5 basis. Because there are so many stocks out there, there's always going to be something that's moving, regardless of if it's strong or weak relative to the market. And so if I don't have a stock that's bullish across multiple time frames, then honestly, I don't give a shit about it. I will just move on to the next one because I'm going to be picky. And I should be picky because if I want a high win rate, well, I don't want to be trading a bunch of BS that doesn't do anything and is just wiggling and jiggling around. I want to trade the damn best of the best. All right. So here's a stock I have been looking at over the last couple of days. And this is APP or APP11. And so when I look at a D1 chart, I can see if I scroll back to, let's say, the beginning of the year, the stock's been in a nice uptrend. And you can see, here's my real relative strength indicator. It's got some nice relative strength right now. And we have a breakout above this high of the year on huge volume, very aggressive stacked green candles. And so that tells me there are buyers in here. And so when I look at this daily chart of app, I'm pretty damn bullish. In fact, I would say I'm very bullish. So this is a 3 out of 3 for me on a longer term time frame. Now, just because I'm 3 out of 3 on the stock doesn't mean I would swing trade it. Again, the market tells me I should not be looking to swing trade right now. So remember that market first, that has precedence over everything else. But I still like it on that longer term time frame. And this tells me that there are definitely institutions in here who are buying this. And you can see this little gray kind of transparent graph in the background. This is an overlay of SPY or the market. I like to have it up when I'm looking at a stock just so I can get a little bit more of a general picture of here's the stock price action and here's what the market did. And it kind of just tells me, is the stock strong or not? So I don't even really need real relative strength to tell me, as in this indicator here, if it's strong or not. I can just look at how the stock is moving. So on an hourly basis, here's app. You can see how it was compressing with the market back in August, like this. It wasn't doing anything, so nothing too exciting. But then you can see how the market had a really big drop from just underneath the all-time high down to the SMA 100. And what did this stock do? This stock barely pulled back. In fact, this little line right here, that's the SMA 50, this dotted sort of purplish line. I can go back to a D1 chart. And you can see right here underneath AVWAP-E, it tested the SMA 50 when SPY was well below the SMA 50. And it couldn't even close underneath it at all on a daily basis. So this stock was pretty damn strong because when the market was pulling back aggressively, this thing was barely even tiptoeing backwards. And you can really see that in the real relative strength indicator. And then as soon as the market found support, what did the stock do? It bounced and went bananas to the upside, like absolutely crazy to the upside. So given that they didn't pull back aggressively with the market, and as soon as the market found support, it ignited and blew up higher, I'm very bullish, not only on a longer term basis, but a more medium term basis. So this thing has got a lot of qualities going for it. Now let's take down to an M15 basis, and this basically just confirms that hourly chart. You can see a really nice orderly move higher. Absolutely gorgeous stuff. So I'm very bullish on a 15-minute time frame. And then finally, I get down to a 5-minute chart, and what do I see? Well, first of all, we already know the market's pretty choppy, and I see a stock that ran higher right away at the open. No surprise, it's been really strong. And now today I can see how it's kind of started to, let's say, compress a little bit. We do have a slight directional bias higher, right? Higher lows, higher highs, all that good stuff. So overall, on an intraday basis, I'm pretty bullish. Not overly bullish, but I would say I'm near a 2 out of 3 bullish. But looking at the chart of the stock and what the market is doing, and knowing my market bias for both the market and the stock, I already know I'm not trading a large position size. I'm trading a starter size. And also by looking at how this has been moving, this tells me that when the market pulls back, and I should expect it to, I can probably expect to see the stock pull back as well. And so this tells me that I should be favoring buying dips. When the market pulls back, I want to see the stock not pulling back so aggressively, and I want to see the stock find support before the market does. And so what I will do is I will create an alert for this thing. And what will I do? Well, I will set a Heikin Ashi reversal alert. So when this thing pulls back, it will let me know. And I will also create a trendline alert like this. And this will tell me once the stock has poked it, meaning it's challenging this trend line, I'll get an alert and I can go look at it. And if the market has found support above VWAP and the stock still looks good and it ideally is still making higher lows, then yeah, I would consider a small starter size position on this for a day trade. And because I'm not looking for any aggressive movement in the market, I would be setting a passive target. And what would that be? Well, let's say the stock were to pull back to here, found support here, and started to grind higher, and the market found support above VWAP. I would look to see, can the stock challenge the high of the day? And if it does, I might take profit there. If it has a really nice move with nice consistent green candles on heavy volume, and I think it has a chance to break out through the high, I might hold it and wait to see what it does. If the market decides that after finding support at VWAP, it's just going to start shopping around and doing nothing, or maybe it might even start trying the downside below VWAP, and let's say app is not really doing what I expected it to do, well, I might give it a little bit of time to try to work its way higher. But if it doesn't start performing within 30 minutes or so, and I feel the market has resistance and may try the downside, then I might exit the trade for a small loss, a scratch, a small profit, basically time stopping out of the position. And what is a time stop? It basically just means when I make a trade, I'm expecting something to happen. And I'm expecting it to happen within, let's say, 15 minutes, or it could be I'm expecting it to happen within an hour. It all depends on my market opinion and the price action in both the market and the stock. And time stops are good because when you are day trading, especially, what I like when I'm day trading is that when I enter, the stock basically starts to perform right away. And that could mean 15 minutes or so, I want to see the stock making its way towards my target profit or just higher if I am going long. And that gives me confidence to stay in the trade because I know that the market's telling me that I'm right. And a time stop is basically just extra confirmation that I am picking my spots well, because if the stock starts to move immediately higher and the market is, then I've done a good job as far as finding a good entry point. Now, you don't always have to use time stops. Again, maybe you're not expecting the market to make any kind of move and you're willing to hold on to the trade for at least a couple of hours to make its move. It just depends, and it all comes down to personal preference and how you trade. But that's kind of what I like to do when I'm day trading. I try to be a little bit more strict about how I enter the trade versus something like a swing trade where I am willing to give the trade more time to work out because I have longer term strength and so forth to work with. But when I'm day trading, I don't have that luxury of longer term strength. I'm just, of course, using the longer term chart to tell me, do we have a technical breakout on heavy volume and relative strength? Cool, I'm in because institutions are in here, but I'm not looking to stay for a long time. It's like people who use Tinder for dating apps or just whatever, right? People say, I'm here for a good time, not for a long time. That's probably a terrible analogy, but what I'm trying to say is that I'm not looking to be in a day trade for a super long time like I might be with a longer term swing trade. Anyways, all of what I just ran through is a pretty straightforward process, I guess, in which I start with the longer term context of the market and I ask myself, do we have any big pending news that the market might be waiting for? And of course, we do this week, and that's the FOMC. I look at where SPY is relative to important longer term technical levels like the SMAs, the all time high, trend lines, other lines of horizontal support and resistance, and so forth. And then I work my way backwards down to shorter term time frame. And then I do the same for the stock. And so all of this kind of gives me a better idea of how should I be trading right now? How should I be sizing my positions? And that's kind of it. So yeah, maybe that wasn't very exciting, but I find that this really helps me get a good idea for how I want to size my positions. And you don't have to do it exactly the way I do it because not everyone's going to do it the same way that I do it. I generally have, like I said, three position sizes I trade with, which are a slightly bullish position, a bullish position, or a very bullish position. And that is all derived from the overall context. Some people only trade with two position sizes. Some people trade with like quarter size, half size, three-quarter size, full size. It just depends. And I find that this system works well for me. So that's how I go about it. Trying to think if there's anything else I really wanted to say, but honestly, I don't think so. I would run through some stocks, but I'm not too interested in doing that right now just because I'm probably going to be laying low until the FOMC on Wednesday. And honestly, I recommend doing that as well because you can see today, for instance, the market's not doing much. We have a really weak move to the upside here. We have mixed overlapping candles. We have abysmally light volume. So this is not really high probability intraday movement. And we can expect to see more of this, especially tomorrow and on Wednesday morning, because the market is waiting for big news. And so, once again, context is helping me figure out how much I decide if I'm going to trade or not. And if I am going to trade, what's my position size going to be? So no day is ever the same. The context is never the same. Things may look similar and whatnot, but you always need to apply analysis across multiple time frames to help you get the overall picture of the situation. All right, with that being said, it's time I end this video. And am I going to be making more videos? Yeah, I'd like to, some point in the future. I won't say I'm going to be regularly making videos. I would like to, but I've been pretty busy trading and life outside of trading, so it might be some time before I start regularly making videos again, but I would really like to. And if there is anything that you would like for me to talk about, please leave a comment. For all of my lovely 100 or so subscribers, or anyone else who happens to stumble upon this video, I'm more than happy to talk about really any topic when it comes to trading. So please leave a comment if you're interested. Don't have to. And with that, have a good day. I will leave it there.